Hello everyone, George DeSantis here with a look at the market for the week ending Friday, January 17th, 2020. It's been a pretty good week. Before we get to look at the charts, etc., let's bring up a disclaimer as usual. Take a look at it. It advises you that I'm not a professional investment advisor, and therefore this I only do for my own purposes and put it up on YouTube. Those who care to look at it can do so, but it's by no means an attempt to give any person professional investment advice. So as you usually do, let's take a look at the weekly chart of the S&P 500 first, and then we go to the daily chart. And for those who are new, basically I take a look at the general market, and then I try to look at some individual stocks as time permits. Okay, so on the weekly chart of the S&P 500, what we see here is that there are a number of lines. It's a little bit confusing for those who are not accustomed to this, but first of all, I like to look at the moving averages. This is a 4 exponential moving average. It's situated above the 9 exponential moving average, this magenta line here, and that is situated above the 30 weighted moving average. So as these averages begin to separate from each other to the upside, we typically make the assumption we have an uptrend, and it's a good assumption to be made. We also can take a look at some of the other positive things we see here. The parabolic is continuing to remain below the most recent bar. Parabolic is an indicator that indicates when we should switch from an uptrend to a downtrend or vice versa. At this time, parabolic is saying stay with the trend. It's an uptrend on the weekly chart. What else do we have? We have the price bar on Friday, well, actually last week, because this is weekly chart. On last week, the price bar hit that 2 standard deviation Bollinger Band, that light green dotted line. And so since that's the case, the market is somewhat overbought at this point here, at this juncture. So it won't be too unreasonable to expect a little bit of a pullback. But the uptrend seems very strong. We came out of a bit of a squeeze of the Bollinger Bands here, and we are riding that 2 standard deviation line all the way up here. Now, on the other indicators, MACD histogram remains in positive or bullish territory, these green bars, since this nice move began here. And we can also see that Williams percentage, with the period of 30 that I use, has remained above that minus 50 magenta line since it crossed back here in the middle of January. I love this indicator. It keeps you in the market when the trend is up, and vice versa. It takes you out too when the trend is down. And on Jerry Appel's sum of the rate of change indicator, it's a little more volatile, but it is also in positive territory above that 4% line. So insofar as the weekly chart of the S&P is concerned, we do continue to maintain a nice uptrend. Now here's a daily chart of the S&P 500. A couple of important things to note here. First of all, we look at the usual moving averages. We have the exponential moving average of 4, the exponential above the 9, and 9 above the 30. So uptrend on the daily chart as well as on the weekly, as we saw. Right now we can see that the market closed between 2 standard deviations and 3 standard deviations away from the mean, and therefore we are in quite an overbought territory here. So not unreasonable, as I said before, to expect a bit of a pullback. The buy zone is somewhere around the 30 weighted moving average. So between the 30 and the 9 is a buy zone. So if it gets to come back anywhere here, would be a buy zone, would be a buy indication. Now, the parabolic dots are still below the most recent bars, and especially the most recent bar, Friday's bar. So there's no indication from the parabolic to switch to a downtrend. Now, I drew a line from this high to this high because there is the potential for that bearish divergence of MACD on the daily chart. When the market made a high here, MACD histogram made this high, then the bears broke the back of the bulls here, pulling them below the water, as Alex would say. And when we started rallying again, we have a new high, but so far, MACD has not made a higher high. So if we don't get a higher high in good time, maybe in the next week or two, it's quite possible we could see a bearish divergence and the market pulls back. Okay. Now, since it's on the daily chart, it's not as significant as if it's on the weekly chart. I've said that many times before, and that's been my experience. Others might disagree, of course. So now we can look at some of the other indicators. Williams percent R remains above that magenta line, so that's bullish. And the sum of the rate of change indicator, Jerry Appel's indicator that I wrote in the formula here, that is still above the 4% line. So we still have a nice uptrend going on here, both the weekly and the daily chart. So here's a daily chart of the VIX, the volatility index, and it's sort of inversely related to the markets, you know, the S&P especially. But what we see is that VIX is still very low. It's at 12, so there's very little fear in the market. This is typically inversely related to the price of stocks. So there are those like Larry McMillan who are saying that they believe that this VIX is very low now, that there is a bullish divergence of MACD, and therefore VIX should begin to rise. However, Larry points out that as long as it stays below 16, we should be in good shape. It's okay to own stock, so I'm going to believe him on that one. Here's a daily chart of the ETF QQQ for the NASDAQ. And I use this formula here, this Jerry Appel's formula to get me in and out of the market here. I use the leverage Qs, the TQQQ. So I buy here and I will sell just as soon as it drops below 4%. Right now, it looks pretty good to me. So I'm staying with TQQQ. Well, you can use the non-leveraged Qs, QQQ, if you choose to do this. Now, this weekend's Barron's shows us that as far as Dow theory is concerned, the Dow 30, the Dow Industrials, making a new high. They're making a new high, and now we have the transports confirming it, making a new high. So as far as Dow theory is concerned, we have confirmation of an uptrend here. This relationship of the put-call ratio, etc., is still pretty bullish. So that's about it for that. We'll take a look at some StockCharts.com charts very quickly, so we can leave a little time for the individual stocks. But you can see that the new high, new low index is trending up nicely still. Here's a chart of the S&P, a daily chart with the impulse indicator, colors it green, blue, or red. And since the bar is green, the last bar here is green, we are not allowed to go short. This is a censoring system, as I mentioned before. So we're only allowed to either go long, be buying a market, or holding. And here's our chart of the percentage of stocks in the S&P 100 above the 200-day moving average. You can see we still have a nice uptrend on that. So again, it confirms all the bullishness we've seen. Here's a chart of the S&P on Best Choice Software, and you can see that it is in that nosebleed territory right now. It's at 92.8% on the extreme chart. So we are in that area where we could expect some kind of a pullback because it's overbought. And here's Shake Analytics, and here's the SPY, which is showing you that overbought condition here as well. It's overbought here on the upper band. It's overbought here. So don't be surprised to see a pullback in this market. So you take a look at some individual stocks on Shaken Analytics. And the first one I have here is BMY, Bristol Myers. I did buy some shares around 63. I had a note here to buy it around 63. So I did, and it's done pretty good since then. Right now it's overbought. And money flow is not that strong at all. So although Zacks just came out with a note indicating that they've revised their earnings estimates upward by about 4 or 5 cents. So that's interesting. That's bullish. I own this one too. It's an ETF. iPay. We had a bit of a trading range here for a long time, since August, and now it's beginning to perk up again. The Visa, MasterCard, American Express, all those payment systems. Another one I own is Microsoft. It's now a bit overbought, but I'm not selling this at all. Not right now. You could see the checklist is saying wait because it's overbought. If you don't own it, wait a while. Wait till it comes back down to 30. Here's XLK, one of the SPDR ETFs. It's a technology one. I own it. It's one of the 3 or 4 that I own. XLK, XLC, and XLV, the healthcare. So XLK looks pretty good. You can see it's outperforming the rest of the market, and I still own it. I owned Southern Utilities here, but I sold too soon. I love this nice steady uptrend, and they do pay a nice dividend. But I did sell it. I don't own it right now. Here's Visa. The checklist doesn't look that attractive, but it's simply saying the market is overbought. However, now Visa is beginning to outperform the rest of the market here. You see the relative strength increasing and money flow coming in. So that's why iPay is also going up. See it here? It's now moving away from this long-term average. That's great. Here's Apple. You can see that it's saying neutral on the power gauge and also neutral here. I'm not quite sure why it's neutral on the power gauge. This thing has been screaming going up here. So it's not quite oversold yet. So if you don't own Apple, this may not be the appropriate time to buy it. But I own it. It's my biggest holding. Have a nice gain. A couple more that I either used to own or still own. Target, I did own. I did sell it last week sometime. I had some covered calls. I was able to buy them back much more cheaply and made a nice gain on that one. I started buying Tesla somewhere in here. I don't know exactly where, but somewhere probably higher up. And I still own it. I don't have the usual 2,000 shares, of course, but I do have maybe 600 or 700 shares. But I'm going to hold Tesla. The news is too damn good on Tesla for me to not have a little piece of it. XLF was the financials was one of the ETFs that I own, but I did swap it out for XLC, and let's take a look at that one. You can see money flow has been down, and it's trending up a bit here now. In any case, I swapped that out for XLC. See, XLC looks a little more attractive here. It's trending up nicely here. You have the change in personality from negative to positive in terms of relative strength, and it's very bullish. So I own that one. I also own XLV. It's one of the 3 of these that I own. It's a little toppy here, a little overbought, but I'll show you how it's rated by Shaken. If you look at the ratings here, you will see that XLC is up here, XLK, XLU, XLV, and XLF has dropped out into neutral territory. So I own the top 3, XLK, this, and V. Okay. I sent you an email about InMode. I bought it again. I did have a loss when I previously owned it. I bought 4,000 shares. I should have stepped in more easily, like, you know, in 1,000 share increments. I started to do that again. So I only have about 1,500 shares right now. But I like it anyway. It's bumping off of this long-term trend line. And Zach rates it number 1. Well, that's it, folks. That's all the time we have. It's only a 15-minute video. And so have a great weekend. Enjoy the holiday tomorrow. We'll try and do this again next weekend.